Welcome to our complete guide on Kazakhstan tax residency. Understanding tax residency in Kazakhstan is vital for anyone looking to optimize their tax obligations while living or working in this rapidly developing Central Asian nation. As more international professionals, entrepreneurs, and digital nomads consider Kazakhstan as a base for their activities, it's essential to know the ins and outs of tax residency. In this video, we'll explore how to establish and maintain tax residency in Kazakhstan, highlighting both the basic criteria and the many benefits that come with it. So let's dive in and unlock the potential of becoming a tax resident in Kazakhstan. First, let's clarify what defines tax residency in Kazakhstan. Tax residency is a legal status that determines which country can tax an individual's worldwide income. In Kazakhstan, this is primarily dictated by the 183-day rule outlined in the tax code. If you spend at least 183 days within a consecutive 12-month period in Kazakhstan, you are classified as a tax resident. This rule is straightforward and aligned with international standards. It's important to note that every day counts, including partial days, which means even arriving late in the evening counts as a full day towards the residency calculation. While the 183-day rule is the cornerstone of tax residency, Kazakhstan's tax law features secondary criteria to address special cases. These are particularly relevant when assessing the residency status of individuals who might be close to this threshold or during disputes regarding residency status. Understanding these nuances is crucial for individuals who may not only travel frequently, but also have various engagements within and outside of Kazakhstan, as these factors can significantly influence their tax obligations. Now, let's talk about the tax implications of being a resident in Kazakhstan. One of the primary incentives for becoming a tax resident is the flat personal income tax rate of just 10% on all worldwide income. This rate is markedly lower than the progressive tax systems seen in many Western countries, making Kazakhstan an attractive option for tax planning. Furthermore, tax residents benefit from a favorable treatment of various income types compared to non-residents, who are only taxed on their Kazakhstan-sourced income, often at higher rates. This clear distinction presents significant advantages for individuals earning income from international sources. Establishing tax residency in Kazakhstan does require careful planning and compliance. You must document your physical presence, which begins with tracking your days in the country. Immigration stamps in your passport are a primary evidence of your residency. Additionally, you will need to register with local authorities upon arrival, following specific timelines. Prepare essential documentation to ensure a smooth process. Embracing the strategic opportunity in Kazakhstan offers various benefits, including favorable tax rates and a strategic geographical location, ultimately helping you to optimize your international tax position.